Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario where we're looking on the low time frame for an expanding diagonal to the upside 1, 2, 3, 4, 5, where then we're looking for this golden target box to be hit over here, which is sitting between 38.5k and 39k. In this particular scenario, all of the waves are zigzag structures in an ending expanding diagonal where we're looking for an ABC wave 1, WXY double zigzag in 2, ABC 3, then eventually wave 4 potentially already finished in a very low time frame ABC, or we're looking for another retracement to the downside before continuation, because in a diagonal most commonly you're looking for overlap between wave 1 and wave 4, and as you can see this wick is not low enough to create overlap with wave 1. So preferably in this scenario you would then see another move to the downside to create overlap around the 786 area, and if we look over here around the 786 we do have some additional support, which is the blue box sitting between 35.2 and 35.4k. It also means the white box will be broken, but it has already been retested once. It's basically a support resistance area, resistance, resistance, support. Then you expect it to fill to move one box lower before then continuation to the upside in this particular scenario. If we are looking for a wave 5 towards the upside, then currently with the low that we have of this wave 4, this target for a wave 5, the minimum target, the 1-to-1 over here, is sitting just above the golden target box, as you can see over here. Even more common targets are higher, around 40k, where we also have some additional resistance, as you can see. However, if price would drop for wave 4 to be made around 35.3k over here, then we have to move this extension to the downside as well, which is taken from the low of 2 to the high of 3 to then a potential future low of 4, and then that means that the 1-to-1 over here, the minimum target for wave 5, is going to move into the golden target box, which of course is interesting and something we have to keep in mind. Now, for this scenario, right, we're then looking for a three-wave structure to the downside. Either it's already finished and we continue to the upside in a three-wave structure, ABC, but I'll come to that in a second. But in what I just explained, if you look for another low to be made in a wave 4, we have to be looking for a zigzag structure and then an A, B, C 535 move towards the downside. In this particular scenario, if we look at the target for wave C, we take it from the high to the low of A to the high of wave B, where then the common target for wave C is the 1 to the 1.236, which is sitting between 35.2k and 34.6k. You can see that wave B retraced to the 786 area, which is fine, common target for wave B. The thing that I do look for, however, more locally, is the high of this wave C over here. So in a wave B, we've been looking then for an A, B, and a C structure to the upside in a 535. Diagonal over here in wave A, zigzag in a wave B, and then eventually we're looking for another 5-wave structure up in wave C, 1, 2, 1, 2, 3, 4, 5, 4, 5. Preferably, this was your end of a wave C over here, and not this high. This looks all locally very three-wavy, as you can see, like 3 waves to the downside, 3 waves to the upside, and then potentially a 5-wave move to the downside. And then what you think about is a flat, right? 3, 3, 5, and then continuation to the upside. So yeah, definitely have to observe the local price action here and the CVD divergences as well, which I'll get to in a second. When we look at the resistance boxes, we did have the white box over here, which we got into, acted as resistance. Eventually price was ranging inside this box for quite a while. The order block here was the final leg of resistance, which got wicked over here. So price wicked into this very small gap with this wick and is moving towards the downside. But the fact that price did range for such a long time over here, that increases the probabilities a bit for eventual continuation, but as it stands we're moving down. But I don't really like this to be the high of wave C to end this wave B. For now, a beginning to the downside of a bigger wave C, which has to be a 5-wave structure, right? And then a 1, 2, 3, 4, 5, and preferably you're gonna see bearish CVD divergences, because so far bullish CVD divergences have kept building. It's pretty nutty to see. Now in the more bullish scenario, we are looking for a ranging weekend of some sort, but then an A, B, C. So in this scenario, we have a 1, 2, 3, 4 flat, and then eventually a wave 5 to the upside to finish an A. Then we get a move towards the downside for a wave B before then continuation to the upside for a wave C to again reach that golden target box over here. Very, very interesting. Now for this wave B over here, the common targets are the 382 to the 886 taken from the low to the current high, but in a wave A, preferably, if we look at this being a flat, preferably this is then a wave 1, 2, 3, then we have a 4 and you get a 5 to the upside. There's currently no overlap by a hair between the high of 1 and the low of 4, so that is allowed for a normal impulsive structure where you're not looking for a diagonal but a 1, 2, 3, 4 and a wave 5 to the upside for wave A to finish, then B, and then eventually wave C. Do have to keep in mind, if we take this high, there is the potential to continue towards the upside, so the reaction will be very important in that area. And then if price moves to the downside, we do have a little bit of support over here as it stands, right, with the speed fan taken from the low to the high. We have the volume profile of this range and the fibs also taken from the low to the high, and this area here has a nice little bit of support. We have an order block, we have the value area low of this range, we have the 0.5 and the golden pocket of the speed fan. All of this is sitting between 36.5 and 36.7k for then potentially a bounce if price goes towards the downside, and you can see that above important resistance is the point of control of this range at 37.3k. Now, if we look at the bearish Elliott Wave scenario here, then in a bearish scenario we're looking on the medium time frame for an ABC, but that means that in this wave B you're looking for a 3-wave structure in an ABC zigzag. A, 5 waves, B, and then eventually you want to C to the upside, but it's not easy to count this as a nice solid wave C over here, which has to be a 5-wave structure. Now you can count 5 waves here, but this wave C, what are we doing then? 1, 2, 3, 4, and then an extended 5th. That is for me the only way to count this as an ABC. And when you look at the targets for a wave C, the most common target for a wave C is all the way down here, between the 1 and the 1.236, taken from the low to the high of A to the low of B, with the 1.618 already being a less common target for a wave C. You can even toggle on the 2.618 over here, and if you put the 2.618 on the chart, then you'll see that the wave is even higher than the 2.618. And that is incredibly rare, of course, for a wave C, which lowers the probabilities of this particular scenario. And in the bearish scenario, you're of course looking for this to be a wave 1, 2, and then you want to see a wave 3 to the downside, where also for this wave 2, you want this to be your high for then a move towards the downside. Because for a wave 2, you can't have this being an ABC ending over here, put wave 2 over here, and then another 1, 2, where wave 2 takes the high of 1. That's not allowed. So this has to be your high, but then again, I don't really like this to be the high of this corrective structure based on the price action that we have, especially here locally. So it lowers the probabilities for this scenario. Also, what I really like to see as well for a bigger move towards the downside is bearish CVD divergences, and I keep talking about, but we haven't seen any bearish CVD so far between this high and the lower high. Little bit of bearish CVD here, but all the bigger ones are all bullish. Now for a wave 3 to the downside, as it stands, minimum target usually the 1.618 at 33.7, 33.8k. If we then look at the CVD divergences, then over here you can see what I've been talking about with the bullish CVD divergences, right? So we got bullish CVD here, high low in price, lower low on the CVD, but also here higher low in price, lower low CVD. This one played out as price took this high, but now again we have a higher low in price, lower low on the CVD, and I can clearly show this with what I can show you on this chart here, AGGR chart. Just look at the CVD moving down, right? Higher lows on price, lower low on the CVD, also more locally here, higher low on price, lower low on the CVD. It's always important to keep a close eye on what happens locally. You did see a little bit of like some red lines here, so we had bearish CVD already playing out here locally, little bit of bearish CVD as well, but bullish as well. So on yellow we had a lower high on price, but here a higher high on the CVD. But then on blue, from this low, we have higher lows on price but lower lows on the CVD. So it's both bullish and bearish very, very locally here. We have bullish ones and here is bearish. And if price pumps just a little bit higher, then the bearish one is invalidated as well. So far, bullish CVDs are in control. There's absorption of market shorts going on into limit long positions for continuation to the upside all the time. And that is then also what is currently really impacting the probabilities for me, that on the low time frame, you know, where we are, probabilities are higher for the bulls at the moment to still reach that golden target box at a given moment before we get a bigger retracement towards the downside. We can usually expect a weekend range, but generally, eventually, we do expect a bigger retracement to come, but as it stands now, the probabilities are higher to first hit the golden target box before any bigger retracement might happen for much lower prices. Yes, we can range throughout the weekend and that's no problem, but before bigger retracement at the moment with all the divergences going on, probabilities are higher to first move up. And that's also here. Bullish, well, we have bullish CVD divergences building. Also, this high over here was not made at a target box, and I do like pivot points to be made at target boxes. For the bearish scenario, we could think about, well, you know, an expanding diagonal is a rare ending structure. It's not common at all, so something to consider. But especially important for bearish scenarios, I want to start to see a buildup of bearish CVD divergences as price is moving to the downside. And as long as we don't really see that, it really impacts the probabilities of the Elliott Wave scenarios. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.